All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market about 90 minutes left to go here today. I'm starting here just a little bit early, but been pretty much all down all day here for the market. We've had a few small rallies. Bonds are just continuing to surge here. In fact, you can see the the ZN here, the bond futures for the 10-year Treasury, pushing up to some new short-term highs. Still haven't eclipsed the highs from last week, but starting to get closer in that regard. We have a few stocks out there that are trading in the green, but definitely not a lot of them here. In fact, if we come over and just take a look at the S&P 500, I'll pull it up here. We have 55 stocks that are in the green. The rest are in the red. And that's a pretty bearish stack, very bearish stack. When we look at how the sectors are flowing here today, it's also a bearish stack, associated there with them, as the market just continues to bleed on lower here today. And some things like the banks, which started off really weak, they've kind of just stopped moving on lower, while other things are starting to move on lower and to kind of get sold off. Some of the stocks like Apple that have spent most of the day in the green, they're starting to get sold off here, and that's just what we're seeing here throughout the day. And it is continues to show the metrics continue to show a very bearish stack here, and a bearish market vibe. And I think it's pretty telling that we see a little bit. We saw the market basically rally 2780 up to 2940. That's one of the biggest multi-day market rallies that we're going to experience in the markets typically. We did not see that move trigger bullish in the metrics, right? We didn't see the internals of the market actually move bullish with that, and I think that's very telling. Now, it doesn't mean we can't see things turn around right here and start to loop up and the metrics change or anything like that. But what we're seeing so far is still a very bearish stack. Now, I titled this video "The Trade Setups." Okay, it's a market right now where I think some of the trade setups, they're incredibly simple, and there's not a lot to them. There's not a lot of complexity. There's not a lot of over-analysis here with them. And last week I talked about the VXX. I talked about the SPY puts I went out and bought, and those are just how I've kind of gotten into things. But we've also talked about things like Caterpillar, in particular this candlestick pattern. And I bring it up because right now, today, we are seeing this happen with a lot of stocks. And the trade setup's very simple. Here we had Wednesday. Caterpillar went up, right? Moved on up, moved above the high from the prior day. If you're bullish, you're a buyer, right? You're a buyer with a stop on the low, Thursday's price action. If you're bullish, you're buying with a stop on Thursday's low, which means on Friday you got knocked out, right? You got knocked out. Great. All right, fine. A little bit of risk, and fine, realized it, but, got you out in a good spot. If you're bearish, you're waiting for those lows to break, and on a break of those lows, you're shorting it. And you're using the high from Thursday as the stop price. Caterpillar kind of had that break of the lows, of Thursday's lows, had that happen on Friday. But today we are seeing it happen with a lot of other stocks. FedEx, for example, right? That has that price action happening where it's breaking below Thursday's lows. As we look across the market today, we are seeing a lot of this where the Thursday lows are breaking. What's the trade setup? The trade setup is buy or is to short with a stop on Thursday's highs. Now, for something like FedEx, that's way too high for me, so I'm going to put a stop on today's highs. right? I'm going to tighten it up a little bit. Tightening it up does increase the whipsaw risk, and I'm okay with that. I'm more than okay with that. I know what type of market we're in. I know the whipsaws can be fierce, but that's the setup, and they're all over the place out there. In the market today, and just something where there are examples like Honeywell that hasn't broken that Thursday low or Thursday open price. But when you start looking around, a lot of stocks, are much more in the FedEx category than in the Honeywell category out there in the market today. We have things like a General Motors, right? Breaking below Thursday's lows here today. That's a very bearish move, and one that typically has some downside follow through. Now, it's not uncommon, though, to see a day or two of upside before, selling off again. And the safest stop is on the high from Thursday. But, you want to tighten that up. I can't blame you there with it. Just understand the whipsaw risk is a little bit greater. So the trade setups, that are in here, they're pretty darn easy. Right? They're pretty, they're pretty straightforward. There's nothing overly complex about it when it comes down to it. Now, for the challenge, we need a 3-7 crossover, right, in order to go and play a challenge trade. Now, when it comes to stocks making 3-7 crossovers, and General Motors is not on the challenge watch list. If it were, well, never mind. But when it comes to these 3-7 crossovers, about 18% of the 3-7 crossovers that we've seen in 3 years worth of data have qualified as challenge triggers. Why do I say that? Well, I say that because I show you the 3-7 crossovers, right? The sharing and understanding the 3-7 crossovers is, what we decided to share of the algorithm, with the community, just so that there's that kind of blanket of consistency. Okay, this, it has to have that to be a trigger. And so we're not just pulling, hey, we like this stock or we like that stock, right? They give some measure of consistency there. But only about 18% of the crossovers actually materialize into triggers, right? A lot of them are like Verizon, right? How many 3-7 crossovers has Verizon had in the last few months? Any trend going on here? No, not at all. Right? No trend whatsoever. In fact, since the challenge started, Verizon had a few up days, few down days, and it has just been, it's been chop city. There's no real trend that has materialized here for Verizon. And in that, we've had a lot of 3-7 crossovers, right? Upside, downside, and they haven't materialized into signals. And so just keep that in mind. Only about 18%, actually materialize into signals. We could loosen the algorithm up to change that, right, and to make it so a greater percentage do that. But then the odds aren't in our favor, to nearly to the same degree. And the bottom line, when it comes to challenge trades and making challenge trades, I definitely want the odds in our favor. I've had quite a bit of feedback about this period of no signals, and some of it has been quite interesting, and I've appreciated it and everything else. But nothing's changing. There with it. I'd much rather go through a period of no signals and stay in cash until the signals are there, and take advantage of those signals and make a couple $1,000 off the next signal. Then sit there and just dance around and stuff where it doesn't have a signal, it doesn't have those odds in our favor, and it may go our way, right? I mentioned the VXX trade that I did personally. I could have done it for the challenge, right? Could have done it for the challenge. We'd be in a good spot right now and everything else, right? But, it would take away some of that challenge consistency. And so I'll continue to share some of the trade setups that I see out there as we go forward with the lack of, challenge signals. But you're not going to see me put money into play for the challenge until we do get, challenge signals come into play. Today we have a downside 3-7 crossover on UPS. I thought, this may have a shot, but it's just still too high in its range to bring that consolidation risk component down. UPS is one of those where if we loosen the algorithm just a little bit, it would be a signal. But we're going to keep the algorithm as it has been, and it is fairly tight. Right, it is fairly tight, and for good reason, and with good results. So no reason to really alter or change that here just yet. If we look around at the market internals today, I think it's very interesting, that we saw the rally that we did last week without the internals changing to the upside. And then you kind of look around, and some of the internals here today are actually eroding to a greater degree than what we saw the internals improve last week. And, we're not talking about a huge sell-off in the market here, just yet today. And so, you have number of stocks moving above 7-day moving averages. We only have, 37% of stocks trading above the 7. That's a pretty bearish number there. If we look at number of stocks above the 20-day moving average, we're looking at 28%. So that's another very bearish number. And this morning I talked about just kind of my thoughts on where things are and where things are going and what's kind of the path here. And bottom line is all the incentives are for the market to go and hit new highs, and I do believe the market will go hit new highs. But when we look at the short term, and we look at the short-term dynamics, all the incentives are down right at the moment, and it's just one that I do expect that we will see more selling and more chop along the way, and we're going to see some big rallies in the midst of that. And that's just that's typical of what we see in the markets. Okay. So anyway, those are, that's kind of, if you're itching for a trade, take a look at those trade setups, where the stock is breaking below Thursday's lows. There you have an easy stop, easy risk reward, set up there with that. I was asked about VXX. I'm still in my VXX. I can't argue with anybody taking it and moving on, right? I'm holding it. Why? Because for me, it's very simple. If VXX goes down and my trade goes to zero, I can sleep at night. I'm okay with it. I'm willing to accept that risk. And I know some will say, Jeff, that trader doesn't do that. Trader, blah, blah, blah. Give me all those trader rules that, whatever. I don't care, right? I'm not looking at it that way. I didn't put enough money in it to look at it that way. I'm looking at this trade as I'm going to regret it big time if I wake up and the VXX is up in the low 30s and I got out for a measly pittance. It's not, the trade here for me, and I'm not saying it's for everybody. If someone put in more money and there's, they have more at risk or something like that, take your game, move on, take half, move on, whatever. There are all sorts of, wise profit-taking strategies that you can employ, right? But for me personally, this was not a trade I put on the board to go from 26 to 28. This is a trade I put on the board for the possibility of going to the low 30s. And so, for me, it's okay. It's kind of started to move. All right, great. Next, and we'll be holding on to it. And yeah, that does mean it could go to zero, right? And I'm willing to take that risk. If you're in it and you're not, hey, you know what? Take some profit, take some gain, take some of it and hold the rest, or take it all and call it a nice win and wait for the next setup, right? There's absolutely nothing wrong with that, but for me, it's much more of a swing for the fences, go for a home run, type of trade in terms of the actual trade. Now, it's not a home run swing for the fences type of trade in terms of my exposure in it, right? My exposure in it's not going to make or break my trading for the year. It'll be a nice little bonus if it goes, and it's not going to hurt too bad if it doesn't. So it is that's kind of the way I'm comfortable being in it and being set up there with the with the VXX. Okay. Alrighty, so no new signals here this afternoon. Market vibe continuing to erode, continuing to be bearish, and the setups out there today are quite bearish. They're quite bearish. If you're looking on the bullish side and you say, you know what, Jeff, I don't want to be a seller, I want to be a buyer, you take a look at things like Bank of America, right? And if we start to break above today's open price tomorrow, now you can start talking about a risk reward the other way. Now you can start talking about some sort of island reversal, some sort of area to play off of. It's not there yet, right? But if you get a gap up tomorrow or you get a move tomorrow above the highs for today, now you can kind of use some of the same principles and say, you know what, something's changing, and here it is. But bottom line, we are going through a pretty dark period in terms of economic data and in terms of earnings, so there's not going to be a lot for the market to sink its teeth into. So it's going to be looking at the headlines, going to be looking at the news. And if you think about fund manager Tom, does he have any reason to go out and aggressively buy this market? Not really. Not really. In fact, very little reason to go out and buy this market. And so fund manager Tom is more than okay just kind of sitting back and letting things play out. And fund manager Tom may get a knock on his door from the risk department saying, look, things are changing out there in the market. You have to sell some stuff. And fund manager Tom may be forced to sell some of his favorite stocks, even though he likes them for the long term. And I think that's the risk, the biggest risk that the market poses right now. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.